Is the crypto trading firm Radkl in a tight spot? On Tuesday, a spokesperson for Radkl confirmed to Bloomberg that hedge fund manager Steve Cohen had liquidated his interest in the cryptocurrency trading platform. And now, uncertainty exists around the future of Radkl, a company founded by market maker EXITS on the New York Stock Exchange. And as if that was not bad enough, according to Beatrice O'Carroll's LinkedIn page, the company's managing directors, both Jim Greco and Beatrice O'Carroll, left their positions in February and the latter in June. So what is happening to Radkl? And why has Steve Cohen exited from Radkl? Well, let's get started. Reports indicate that Steve Cohen, the guy behind the hedge fund Point72 Asset Management, has divested himself of his shares in the trading business Radkl. According to a Bloomberg report published on Tuesday and quoted by Radkl's spokesperson, his exposure to cryptocurrency assets has been reduced following Cohen's departure from the trading business. In spite of this, a spokesman for Radkl reportedly indicated that the firm was still extremely well capitalized despite the situation. Cohen, whose personal and business net worth is estimated to be greater than $17 billion, has backed cryptocurrency and blockchain ventures. According to Cointelegraph, in September 2021, the management of the hedge fund took part in a fundraising round worth $50 million for the non-fungible token startup Recur, while Point72 Ventures sponsored a round worth $21 million for the cryptocurrency analytics company Messari. And what is the current state of Radkl? Despite the fact that it was reported that 4 managing directors left Radkl in 2022, the website of the firm only lists one job opening for a Linux developer in New York. On the other hand, Eli Gollum was allegedly hired by Point72 in June to oversee the cryptocurrency branch of the hedge fund in an effort to expand trading in digital assets. The alleged investment took place at a time when the prices of several cryptocurrencies, such as Bitcoin, BTC, and Ether, ETH, were experiencing substantial price fluctuation. This period of time coincided with what many have referred to as a bear market or the oncoming crypto winter. But in spite of the pessimistic inclinations that are prevalent, 66% of the 89 hedge funds that were questioned for a study that was conducted by PricewaterhouseCoopers in June claimed that they expected to increase their exposure to cryptocurrencies by the end of 2022. It was reported in April 2021 that the venture capital firm Point72 Ventures was looking for ways to invest in a new generation of infrastructure firms that are linking the crypto and non-crypto worlds for financial services, businesses, and consumers. This was done in order to capitalize on the growing demand for blockchain technology. Aiding the millions of people and millions of businesses throughout the world that are interested in using cryptocurrencies for the long term. According to the most recent financial report that was published by Point72, as of the end of the first week of April, the company handled more than $24 billion worth of assets. GTS, a market maker on the New York Stock Exchange, launched the quantitative crypto trading firm Radkl in the previous year. And this year alone, Radkl has already experienced the departure of 4 of its managing directors, including Jim Greco, Alan Erickson, Jason Bell, and Beatrice O'Carroll. And currently, on Radkl's website, just 5 employees are identified, including O'Carroll, who verified her departure from the company to Bloomberg through a message sent to her LinkedIn account. In spite of this, a representative from Radkl stated in an email that the company's current investors have adequate financial resources and that Radkl would maintain its rapid growth rate. But how had Steve Cohen joined Radkl in the first place? In September of last year, a number of news stories highlighted the fact that Cohen, a Wall Street billionaire who was also the owner of the New York Mets baseball team, had endorsed Radkl. The conventional financial community's growing interest in and acceptance of the sector was seen as evidenced by his engagement, which was perceived as evidenced by his participation. However, this year, a decrease in digital assets and a flurry of crises have cost investors money and, for some, diminished the attractiveness of cryptocurrencies. At the time, prices were flying to new highs. This year, a decline in digital assets and a bevy of crises have cost investors money. Cohen's cryptocurrency interests were not limited to Radkl alone. Cohen's family office, Cohen Private Ventures, provided financial backing to the non-fungible token startup Recur in the previous year, while Point72 Ventures provided funding to Masari Inc. earlier in 2021. In June of this year, Point72 gave Eli Gollum the role of head of cryptocurrencies for Cohen's centralized quant company at Cubist Systematic Strategies. And what is the cause of this whole crisis? On the other side, the founders of Three Arrows Capital, 3AC, agreed that the Terra Luna crisis had a cascade impact on the bigger market. Co-founders Kyle Davies and Sue Jun believe that the overconfidence that the current cryptocurrency bull market has engendered has had a negative impact on the global financial system. As a direct consequence of this, the Boston Consulting Group forecasts that there will be 1 billion users of Bitcoin all over the world by the year 2030. According to a recent study conducted by Be in Crypto, a management consulting firm, linked the adoption of cryptocurrencies to the growth of the interest in the 1990s in a report that was made public on July 22, 2022. Simply, the technology will still catch on. So what do you think about Steve Cohen's exit? And how will this impact Radkl? Please tell us in the comments section. That being said, we get to the end of our video. Thanks a bunch for watching and stay tuned for more. Be sure to check out the videos being displayed on your screen. Until the following video, peace! I'm out.